I will explain for the part A, which is MFRS 8 operating segment. In paragraph 5, operating segments is a component of an entity. It is engaged in business activities which earn revenue or incur expenses. Those activities are regularly reviewed by the chief operating decision maker, for which it discrete financial information. Next, identifying reportable segments. Product or services is significant and constitutes as an identifiable business in which the entity operates report as separate operating segment. Operating segments are only required to be reportable when at a quantitative threshold. Two or more operating segments can be combined or aggregate. Report as one if conditions are satisfied. As for the last one, number of reportable segments, the entity should ensure the total of external revenue. It must be at least 75% of the total entity's total revenue. If not met, additional reportable segments should be identified, whether 10% threshold or at least 75% of entity's total external revenue.
Quantitative threshold. There are three types of it, which is revenue, profit, and assets. Under revenue, it is report revenue from the sales. It should be reported to the external customer and it does segment sales. It is 10% or more of the combined. Under profit, absolute amount of the segment's report profit or loss is 10% or more. There are two conditions, which is the combined report profit of all segments reporting profit and the combined loss of all segments reporting losses. Under asset, the segments of the asset are 10% or more of the total assets of all operating segments. If it's more than 10%, it deserves to be reported.
For the first CODM, which is Group Chief Executive Officer, CEO Spritzer Berhad, Lim San Lee, he plays an important role in decision making. His duty are to set the overall strategy, drive major decision, oversee the performance, lead the management team, and to sustainability stakeholder relationship. Next, Group Chief Financial Officer, CFO Sami Berhad, Joy Tan Wei said. The group is another important figure who evaluates financial performance, ensures efficient capital allocation, and provides critical insight. Her duties are to manage financial help plan resources, monitor cash flow, advise on investment, identify potential financial risks, and ensure the company financial reporting is accurate for all stakeholders.
I will explain types of segmental reports and its importance in financial reporting. Business segment reporting provides insight into a company's different activities, helping stakeholders assess the performance of each segment. This is crucial because it allows investors and management to make informed decisions. For example, strong performance in one segment might attract more investment, while a weak segment could signal risk. For example, in Spritzer Berhad Annual Report 2023, we see a breakdown of TR segment, which is manufacturing revenue of 468,585,000 with a segment result of 69,108,000, trading revenue of 20,859,000 with a segment result of loss 2,359,000, and others revenue of 1,231,000 with a segment result of 40,412,000. Geographical segment reporting highlights a company's performance across region or business areas, helping stakeholders see how each segment contributes. According to the annual report, Spritzer Berhad export sales account for less than 10% of its total revenue. As such, geographical segment reporting is deemed immaterial and not included in the financial disclosure. This is in the line with financial reporting standard, which allow company to omit segmental detail if they are not significant. This disclosure indicates that Spritzer's operations are predominantly focused within Malaysia, with domestic sales forming the bulk of its revenue. For instance, Spritzer flagship facilities like the Taiping plant primarily serve the local market, emphasizing its strong domestic presence, while geographical segment reporting is not detailed. This is reflect the company's primarily domestic business strategy, with export sales forming a minor part of its operation.
Question number 4. Key benefits of segmental reporting for users of financial statement. Number 1. Improve financial analysis. Segmental reporting breaks down financial results by business units or geographical regions, providing users with a clearer understanding of revenue, stream, and profitability. For example, Spritzer Berhad reports separate revenue contribution from manufacturing, trading, and other activities, enabling investors to pinpoint high-performing areas. For Sunway Berhad, the segmental report provides detailed financial information for various business segments such as property development, construction, and healthcare. And the second one is risk management. Segmental data allows users to identify areas of vulnerability. The segment reporting in Spritzer Berhad Annual Report 2023 shows that the manufacturing segment has a significant revenue contribution and a positive segment result, indicating stability and potential for growth. In contrast, the trading segment shows a loss, which may signal higher risks or challenges in the area. For Sunway Berhad, the geographical segment report highlights revenue and profit from various countries such as Malaysia, Singapore, and China. This allows users to assess the geographical risks and opportunities such as reliance on the Malaysian market versus expansion in other regions.
Part B, Interim Financial Reporting, MFRS 134. It provides guidance on the preparation and presentation of financial reports for periods shorter than a full finance year, such as quarterly or half-yearly reports. It outlines the minimum requirements for content and specifies the principles for recognizing and measuring transactions during interim period. So, the objectives are to prescribe the minimum content of an interim financial report, to prescribe the principles for recognition and measurement in complete or condensed financial statements for an interim period, and to provide timely financial information to users. The purpose is to enhance transparency, comparability, and timeliness of financial reporting, providing stakeholders with relevant information to assess the entity's financial health and performance during the year. So, there are two significant events that occurred in Spritzer Berhad. First, vesting of shares and changes in share capital. Subsequent to the financial year end, 3,010,800 units of the SGB shares are vested, and the company transferred it to eligible employees and executive directors on 10th of January 2024. The transfer price of the treasury shares is RM 2.025. After the transfer of treasury shares, the number of issued share capital of the company stands at 390,302,145 ordinary shares, whereas the number of treasury shares held as at that date is 12,000. The second one is subscription agreement. Wholly owned subsidiary Chuan Sin Sdn Bhd entered into a subscription agreement with the Taping Tapis Sdn Bhd to subscribe for ordinary shares. After the vesting of shares that occurred since the end of the last annual reporting period, Spritzer Berhad experienced a 70% increase in profit for the quarter ended December 31st, 2023, reaching RM 13.2 million compared to RM 11.3 million in the same quarter of the previous year, indicating that the share vesting has positively influenced employee motivation and performance, contributing to the overall growth in the company's financial results. Following the significant events that transpired since the end of the last annual reporting period, including the acquisition of shares in the Taping Tapis Sdn Bhd and the implementation of new marketing strategies, Spritzer Berhad has achieved a notable 15% increase in revenue for the quarter ended December 31st, 2023, rising to RM 125 million compared to RM 108.7 million in the same quarter of the previous year, while profit before tax surged by 28% from RM 13.5 million to RM 17.3 million, underscoring the positive impact of these strategic initiatives on the company's financial performance.
Next, I will explain about the latest interim reporting period for both the current and comparative interim financial statements of Spritzer Berhad for fourth quarter from October to December 2023 as stated in the table. MFRS 134 ensure that the companies to provide relevant information for current period and comparable figures from the past. The first one is the statement of financial position. The current interim report is as at 31st December 2023, showing asset, liabilities, and equity at the end of quarter 4. The comparative is from 31st December 2022, showing the company's position at the last year end. This helps to track changes over the year. The second one is statement of profit or loss and other comprehensive income. The current interim report includes two parts. The first part is from October to December 2023 for 3 months. This covers the company's performance in the fourth quarter of 2023. It includes revenues, expenses, and profit or loss for 3 months period. The second part is from January to December 2023 for 12 months cumulative. This shows the performance for 12 months of 2023. It helps users to see the overall trend for the year up to the fourth quarter. The comparative is similar period from 2022 to compare quarterly and year to get the results. Next, for the statement of cash flow, the current interim reporting report show that the cash movement from January to December 2023, showing how cash was generated and be used. The comparative is the same period in 2022 for comparison to evaluate if the company is managing cash better or worse compared to the previous year. As for last statement of changes in equity, the current interim report shows the equity changes from January to December 2023, including retained earnings and dividends. The comparative shows the equity changes for the same period in 2022 to track trends, allowing users to understand any differences or trends. In a nutshell, MFRS 134 ensures interim reports give a clear view of current performance and allow users to compare with a prior periods for better decisions making. We have reached at the end of the presentation. With that, thank you very much.